Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. And the topic of the day is payroll. You know, one of the things that happens during tax season is that tax professionals wind up getting taxes from business owners, and they're got all this stuff going on with their businesses. And one of these things is payroll that we find that is wrong a lot of the times. So that's what I want to talk about today so that you understand. Because the street committee will tell you that, you're not a real boss, you're not a real business owner unless you're on payroll. That is not true, okay? So please do not let somebody basically punk you into getting yourself on payroll when you really don't belong there. So if you get some street committee tax advice, please, oh please, consult a tax professional that understands these things before you go do something, okay? Because I told you the fixing part, it costs way more than the prevention part. So that's it. Okay. So now let's talk about payroll. When should you be on payroll as a business owner? That depends on your structure. Okay, that's what it is. It depends on your business structure. So if you have a sole proprietorship, if you have a single member LLC, that's the disregarded entity, taxed as a sole proprietorship. If you have a partnership, and if you are a member of a multi-member LLC that is taxed at a partnership, none of you are on payroll. Nobody is on payroll. So let's go through these structures and then we'll get down with the rest. So with the sole proprietor and a single member LLC, as a disregarded entity, you are taxed the same way. Your final profit at the end of the year is considered your salary. You pay self-employment tax on that. So when you're going through all of these deductions and such to get that profit down as little as possible, that last little number is showing what you paid yourself, and that's what you pay your self-employment tax on. Now, your self-employment tax goes to your Social Security and Medicare. So just like a person who has a W-2 job, there's Social Security and Medicare that comes out of their check. Well, yeah, that's what your self-employment tax goes to. Okay. So that you pay your self-employment tax based on your profit. No profit, no self-employment tax. Whole bunch of profit, whole bunch of self-employment tax. Now, most people cringe when they hear self-employment tax. So we're looking for all kinds of ways to save on self-employment tax, okay? But paying self-employment tax is not the worst thing in the world. Like, I really need for you to understand that, yeah, nobody wants to pay self-employment tax, but it's not like it's going to the wind. That's going to your Social Security and Medicare. And while you're so busy trying to save on self-employment tax, you get yourself into some business structure that costs you more than the self-employment tax would. So it's not just about that. Okay. I just wanted to throw that in there. So sole proprietors, single member LLC, what your final profit is for the year, that is considered your salary. That's what you pay self-employment tax on. Now, in the how you pay yourself, you simply write yourself a check from your business to you, and then you put that check in your personal bank account. Okay. Yes, I said write a check. You want a paper trail, and you want to be structured and pay yourself as if you would be paying an employee. Okay. I said as if, not that you are. As a single member LLC, sole proprietor, you are not an employee. You are the business owner. That is it. Okay. Next, partnerships. Whether you have a straight partnership where you and two people spit shake and you guys are in business, or you have a multi-member LLC taxed as a partnership. If you are a partner working in your business, then you receive what's called guaranteed payments. That's when you and your partner have decided how much you are going to earn. You write yourself that check, and that is subject to self-employment tax. It is not payroll. Now, you can have silent partners, right? If they're not working in the business, then they don't get guaranteed payments. But if you are actually performing services for your partnership, then you should be getting paid. That's called guaranteed payments. It is not payroll. You get guaranteed payments, and that's subject to self-employment tax, okay? So that's it. So sole proprietors and single member LLCs, your final salary, your final profit is your salary. For partnerships and multi-member LLCs taxed as partnership, your guaranteed payments are subject to self-employment tax. That's a salary. And again, you write yourself a check from the business to the partner. All right. Now, let's jump into S Corps, because people go and jump off into the S Corp abyss because they want to save on self-employment tax, okay? So when you have an S Corp, yes, as the owner, you must be on payroll. It is not optional. I have seen people who go and form these S Corps, then don't put themselves on payroll and think they're going to just take all this distribution without paying self-employment tax. That is no, that's wrong, okay? It is a requirement for you, if you have an S Corp, to be on payroll. You must issue yourself a W-2. You must file withhold employment tax and submit that to the government. You must file these quarterly employment taxes, okay? So there's a lot more administration that goes along with an S Corp. They may cost you more than the self-employment tax that you were paying as a single member LLC or a sole proprietor. So this is why I say, don't just go jump off and be an S Corp because you heard it could save on self-employment tax, because you might save on self-employment tax, but pay that money somewhere else that you really don't need to at this time, right? So to make that shift from a single member LLC to an S Corp is a math question. It is not something you just decide to do all willy-nilly. You need to have your bookkeeping in place. You need to have your payroll in place. If you can't afford to outsource those things, then you probably do not have any business becoming an S Corp anyway. Okay? So that's what S Corps. You are required to be on payroll. Now, C Corps. Okay. So C Corps, if you are the owner of a C Corp and you work in your business, you must be on payroll. Again, that is not optional. Now, you can own a corporation and not physically work in the corporation. If that's the case, then you don't need to be on payroll. But if you are actually working in your business, then you must be on payroll. It is not optional. Okay? So with this whole thing about, not being a boss unless you're on payroll, please, oh please, do not subscribe to that. Go and ask someone. Now, we've gone through the business structures. You know when payroll is a requirement versus when it's not. And you can have employees as a sole proprietor. You can have employees as a single member LLC. You can have employees. You, the owner, are just not one of them. So you don't have to go and form some additional business structure in order for you to have employees. You don't need to do it. Okay? It's just that you, the owner, won't be on payroll. If you have an S Corp, payroll is not optional. It doesn't matter if you have employees or not. You got to have it for yourself. Partnerships, same thing. If a partnership can have employees. The employees are on payroll. The partners are not. If you are working in this business, you are not on payroll, guaranteed payments, self-employment tax. Okay? So I hope that clarifies some things about payroll. We so busy trying to do what the rich people do. And we're trying to be a boss, that a lot of times we wind up making these mistakes, when if you have just invested in speaking with a professional to ask about these things before you do it, it will save you so much money on the back end. Because see, when you go and you put yourself on payroll when you're not supposed to be, then the undoing of that, it costs a lot of money, right? If you are an S Corp and you don't put yourself on payroll, the IRS can come back and reclassify your income, and you will get fines and penalties for past due employment taxes that you did not file. It's a mess. So please, oh please, consult with a professional before you do anything with payroll. Before you hire your first employee, consult with someone. Before you go and form a business structure, consult with someone. Please get out of this DIY mentality that we have, and you can just go search it on Google and YouTube and it's going to be enough. I'm a tax professional, and I tell you all the time, you can watch all of my 400 videos or 400-ish videos. It's not enough information for you, because you need to have someone looking at your entire picture, not just answering one question at a time. Okay? Seriously, consult with someone, invest in that because it's going to save you thousands on the back end. I promise you that. Okay? So that's it, you guys. Thank you so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here and get your questions answered about your home business taxes. All right? Have a great day, and I will see you all next time. Bye.